Welcome everyone. In this video, we will look at Xcn coin in the short term. When will the train take off? Don't forget to subscribe and like, and please watch to the end so you don't miss anything. The downtrend from the top, which has been in the market for some time and has been suppressing price action, is still going strong. Although the price has made several attempts to break out of this trend line, it has not yet succeeded and continues to move under the influence of the downtrend. However, this situation cannot be expected to last forever. From a technical analysis point of view, it is usual for the price to remain under the influence of the downtrend for a while. But it should be remembered that every downtrend has a breakout point. The price is now at a critical point and is approaching this trend line again. If a strong buying reaction comes from here and the price manages to break above the falling trend line, this could trigger a bullish move. A break of the trend line would mean that selling pressure would ease and buyers would enter the market more strongly. As a result, the price could break above the trend line and potentially head higher. When we look at past price movements, we can see that the price has gained strong momentum and experienced sharp rises after breaking similar downtrends. If the same scenario plays out here, it is quite likely that new buyers will enter the market and the upward movement will gain strength as the price breaks the falling trend line. Technical indicators and market dynamics may also support the likelihood of this breakout. And the price has tried this trend many times, and now that it is weakened, it should break it. Of course, we can't tell whether the train will take off only by the falling trend. Let's look at other metrics to be sure. When we look at the price action according to the Elliott wave theory, we can clearly see that the first wave, the first major uptrend, has been completed. Now the market is moving into the second wave, which is a natural correction. Such corrections allow the strong momentum to rest for a while and allow traders to take new positions. However, the most important question at this point is where the second wave will end and when a new bullish wave will begin. This is where Fibonacci retracement levels come into play. Usually the second wave tends to end at the Fibonacci retracement levels of 0,618 or 0,786. This is because these levels are considered as important buying zones by the major players in the market. Looking at the current price action, we see that the price has now reached the 0,618 Fibonacci level. This level is usually a strong support area where buyers are concentrated and the price can make an upward reversal. However, there is a possibility that the price could also test the 0,786 level in some cases. Even if there is a sag down to this level, it is quite likely that a strong reaction from here will start the third wave. What is important to note at this stage is how the price reacts to these Fibonacci levels. If the price encounters strong buying pressure at 0,618, it could be an important signal for the start of the third wave. However, if it fails to find a strong enough support here, it is also possible that the price will test the 0,786 level. This could offer traders an extra buying opportunity. Either way, if the Elliott wave theory works correctly, a third wave is expected to start after the completion of the second wave, and this third wave is usually the one that brings the strongest and fastest rise. And of course, the second wave should not go below the Elliott starting point. When we carefully examine the chart, we can clearly see that the price has been moving in a downtrend for a long time. Throughout this period, the price has maintained downward pressure by continuously making lower highs and lower lows. Downtrends are usually an indication that the market is controlled by sellers and buyers have not yet gathered enough strength. This suggests that bearish sentiment is still dominant in the market. However, market dynamics dictate that no trend lasts forever. Every downtrend slows down at some point, loses strength, and changes direction as buyers step in. To understand this shift, we need to take a closer look at price action. It is especially important to observe the bottom and top levels of the price to determine when the downtrend may break. Looking at the price action for now, we see that the downward pressure continues and lower lows and highs are lining up. As long as this situation continues, the price is likely to continue its downward movement in general. However, the critical point here is to understand whether the price can gain strength at a certain level. The most important condition for the market to become bullish is for the price to start making higher lows and higher highs. If the price stays above the previous low when it makes a new low, this is an indication that buyers are starting to enter the market. If it then makes a higher high, the trend reversal in the market will become clear. With the completion of this formation, we can get a strong signal that the downtrend has ended and a new uptrend has begun. When we look at the price movements right now, we can clearly say that we are still under the influence of the downtrend. But when this structure is broken and the price starts to form higher lows, it can spark a bullish reversal. These reversals usually occur at strong support levels or at points where large investors step in. Therefore, It's a great advantage to keep a close eye on the current price action and be able to recognize the change in the market early. If the price starts making higher lows from this point, the first step towards a trend reversal will be taken. Then, the uptrend will be fully confirmed as the price makes higher highs, and slowly, the train will start to take off. When we examine the RSI indicator in detail, we can see that there is a strong support level in the lower region, and that this level has moved the price upwards many times in past price movements. This support level shows that the RSI is one of the important zones that the market takes into account, and that reactions from it often trigger a significant upward movement. If the RSI manages to get a strong reaction from this support level and continues its uptrend, it will need to break through the 50 level, which is the first psychological and technical hurdle. The 50 level is generally considered a critical threshold that determines the course of the market. If the RSI rises above this level, it indicates that market participants start buying more and the uptrend gains momentum. In the opposite scenario, if the RSI struggles to cross the 50 level, price movements may fluctuate and a possible sideways process may be on the agenda. However, the important point here is not only that the RSI crosses the 50 level, but also whether it can stay above this level. If the RSI can maintain a strong hold above the 50 level and continue its path with support from there, a gradual rise can be expected up to the next target of 70. Since the 70 level is considered an overbought zone, it may indicate that strong buying pressure is building in the market. At this stage, it will be necessary to carefully monitor the correlation between price movements and the RSI. If the RSI gains a strong momentum with the reaction from the support level, breaks the 50 level upwards and then moves towards the 70 level, we may see a clear uptrend in price movements. This would confirm that the market is bullish and buyers are becoming more dominant. At the same time, some profit-taking or short-term corrections may be seen here, as the RSI will enter the overbought zone once it reaches 70. However, in general terms, as long as the bullish move initiated by the RSI's reaction from the current support level continues, the market has a high potential to move in a positive direction. Another important point to consider in this process is whether the price movements are in harmony with the RSI. If the RSI is rising, while the price is also moving up, this indicates that the uptrend is healthier. Otherwise, if the price action is out of sync with the RSI, that is, if the RSI is rising while the price is flat, this can be considered a positive mismatch and a preliminary signal that the price may be bullish in the future. As a result, the most critical point at the moment is the strength of the RSI's reaction from the support level and whether the 50 level can be broken. If the RSI breaks the 50 level and stays there, the bullish process up to the 70 level may begin. In such a scenario, the general trend of the market will also be positive, and price movements will continue to remain in an upward trend. However, if the RSI fails to break the 50 level and retreats, then the support level may need to be retested. Therefore, keeping a close eye on the price action and the direction of the RSI will be very important to get a clearer idea about future price movements. If the RSI breaks the 50 level, the price may take flight. Yes, friends, this was the case in this video. Don't forget to like and subscribe. See you in the next videos.